Assalamualaikum, a very good day. Today we will continue our lessons about the engineering management and safety regarding of balance sheets and profit and loss. The relationship between balance sheets, okay, and profit and loss account is based on the understanding of P&L or profit and loss. Summarize a business strategy and solution based on the income, sales, and also the expenditure. Okay, and then after that, the resulting profit or loss. Okay, for a given period. However, in the case of balance sheet, by comparisons, it provides a financial snapshot. Okay, at a given time, at a given moment. Okay, we would like to see what happened in those time. So, uh, balance sheets is used to determine a snapshot view of a business, such as asset and then equity, liabilities. Okay, at the end of any financial years, it will determine the company's worth, and also it will sum up the company's financial position. Okay, balance sheets will balancing major factor. Okay, uh, assets and also the liabilities. Okay, both two will try to be balanced. Okay, so we will know the shareholder equities, owns and owes. Okay, we also will knowing after that the asset, total assets, which is based on liabilities plus the owner equity, and also we will getting to know the net assets, which is based on the total asset minus the total liabilities. Uh, Balance sheet will tell first current ratio, which is equivalent to current asset to the current liabilities. Okay, which will help us to know how can the assets covering the debt, okay, or measuring a company's ability to pay short-term obligation, probably in 1 year, or to identify assets that are cash or will be turned into a cash in a year or less, which is if we having more than one value, it is better. Okay, it is a good company. And secondly, balance sheets also will tell us about the asset test, which is current asset, deduct the inventory, okay, and divide by the liabilities here, which will help us to determine what happened to the firm capacity to pay back debt without any selling or asset liquidity. So this will help us to see if company has enough cash to pay its immediate liabilities such as short-term debt, and also will help us to disregard current assets that are difficult to liquidate quickly, such as inventory. And the understanding also is uh, better than value of one is good, okay, for that company. Okay, let's see the exercise of balance sheets. Compile a balance sheets from a following information. justify your discovery by explaining the current ratio and also the acid test ratio. So we have stock for 12,005, and then we have inventories or work in progress product, okay, for 1,000. Our properties is 12,000. Plant and machinery is totaling of 10,000. Okay, our vehicle is valued for 6,000. We have cash in hand 2,000. Okay, our office equipment is valued at 3,000. We have commitment of loan for 1,500, overdraft of 4,000, creditors of 3,000, and we also have other equities accumulate to 13,000. All right, let's see how we want to solve this. Okay, first, what we need to do is to categorize our raw data to become one in asset form, and then in the liabilities form, and then third in equity form. After that, all right, after that, we need to balance between these uh, two value. All right, let's see first. So we have our stock 12,500. All right, so this stock will become here 12,500, and then we have our inventory. Okay, for 1,000, we put it inventory as our asset categorized below our assets, and then we have properties also under our asset here 12,000. Right, plant and machinery for 10,000 category under asset, vehicle also under asset for 6,000. We have cash in hand, this is our current asset here 2,000, and then we have office equipment for 3,000 here. All right, and then we have under category of liabilities, we have loan here, okay, for 1,005. We also have overdraft, okay, overdraft for 4,000. Okay, and then we also have creditors for 3,000. Okay, so we have this total liabilities here for 8,500 ringgit. All right, so we will total all this up for asset. We will get 34,000. Okay, value for 34,000. However, for the liabilities and equity here, we need to add these two up. Okay, 8,500 ringgit plus with the total equity here 23,400 ringgit. Then we got 34,000. So this 34,000 is balanced compared to our total asset. Okay. Right, once we categorize the balance sheets, what we need to do now is to calculate the current ratio, okay, based on asset per liabilities from the company. In our case, the total asset for the company is 34,000, all right, divide by 8,500, okay, of all total liabilities that we got. So we find out that the current ratio for this company now is 4.0. We can say that this company is in healthy condition because each $1 or 1 ringgit debt is covered by $4 or 4 ringgit, okay, in form of asset of the company. However, if we calculate for the acid test ratio, the acid test ratio is based on the current asset, okay, current asset minus the inventories, divide by our liabilities here. So you see that 2,000 from our cash, okay, minus 1,000 from our inventories divide by 8,500 ringgit from our liabilities, we will got 0.11 of acid test ratio. Why is this? It means that the company is not in a healthy condition. Okay, not in healthy condition, because the capabilities of asset liquidity comparing to liabilities, it shows that company had difficulties, okay, to transform its current raw material to marketable products. Okay, so yeah, company have difficulties uh, to product their market and then to market the product. Okay, so they will have difficulties in short term. And what is the current asset definitions? Okay, the current asset definitions is either it is cash, okay, or any inventory or any asset that are reasonably expected to be sold, consumed, or exhausted, okay, through the normal operations of a business within the current fiscal years or operating cycle. Okay, so the example of the current asset probably is cash, okay, cash, securities in short term account, or vendor non-trades receivable. Okay, okay. The second part about the company profile we are interested to know about is uh, profit and loss. Okay, it showing the company's profit or making losses. All right, at the end of the period. All right, profit and loss, or we call those as P&L, is an account. Uh, this P&L shows revenue. Okay, revenue, and also it shows expenses. All right, so once we got revenue, deduct the expenses, we will see that either we are making profit or we are making losses. Okay, and also from here we will see that P&L will provide what is the company's net income. Okay, profit and loss is a document that we will see our gross profit. This gross profit come from our total sales. Okay, deduct all of the stock material, costs of goods sold, or we call all those as operating costs. And we also will seeing that our profit, okay, before tax, after we deduct all of our overhead here, okay, and we will also seeing the figure after tax profit. Okay, okay. Let's see one of the company's profit and loss. We want to know, okay, what is the profit, or the company is making a loss, and if possible, we want to know what is the company's margin. All right. Let's see in 2015. All right. The net income for this company is 496. All right. Divide by 107 uh, 006. Okay. This is the revenue, and then we will see that for 2015 the margins for this company is only 0.55%. Okay, means that for each uh 100 ringgit you will get back your money 55 cents. Okay, for each of your 100 ringgit, not even 1 ringgit. All right, and then For 2016, all right, your net income will become 2,371, and your revenue is 135,987, and after we calculate here, we will see that the margin is only 1.74%. Means that for each of your 100 ringgit, you will get back your money 1 ringgit and 74 cents. And for year 2017, okay, your net income is 3,003. If we divide by the revenue of 177,868, you see that your margin is equivalent to 1.69. Means that for each of 100 ringgit, you get back your money around 1 ringgit and 69 cents. Okay. So what is your opinion regarding of this company's performance? Okay, we will see. It is interesting to know what is your opinion. All right. Okay, let's see another example of this profit and loss. Here, this is from another company. All right. This is the P&L, all right, profit and loss for ABC company. Okay. It shows that for 2016, okay, your net income is 93,000. Okay, and then your revenue is 355,000. If we calculate the margin, we will see that uh, it will give 26.34% of margin for year 2016. All right, a very, very good margin here. It means that for each of 100 ringgit, okay, you will get back your money 26 ringgit. Okay, very, very good dividend. And then for year 2017, your net income is 107. Okay, 355,000, and your expense revenue here is 390,390. Okay, if we calculate, your margin here is 27.5% for year 2017. Very, very good margin. Very, very good performance from this company. If I have my own pocket money now, all right, I will invest for this company, because for each of 100 ringgit, I will get back my money 100 ringgit plus the 27.5 ringgit addition. Okay, each year. All right, for year 2016, I will get 26 ringgit. For year 2017, I will get another 27.5 ringgit. Okay, very, very good company. All right, this is company that we are die to invest for. Okay. Okay, and then this is another example of company's profit and loss. If we try to calculate its margin, all right, 266, okay, divide by 5,504,000 as your revenue here. We will see that our margin is around 4.84%. Okay. Yes, we can say that this company, okay, which is operating with profit and loss of year 2014 here, yeah, very good exercise of their revenue. Okay, very big share, but still they can maintain their profit here. All right, but either you want to invest or not, that's depend on your opinion. If the volume is there, why not? Okay, why not? Although uh, the margin is not as big as previous example, but if the volume is there, you need to think back. Okay, before you say I do not want to invest in this company. All right, think back. So after all, there is a very good relationship between balance sheets and profit and loss account. It is important for us to make a financial judgment. Thank you very much.